Everyone, welcome back to my channel. Today I have another recap for you on how I traded ES. Keep in mind ES, SPY, and SPX all have the same price action, so if you trade one of them, you can trade any of them. It just depends on your personal style of trading and the accessibility through your broker of choice. If you choose to use a tool like Bookmap, I highly recommend that you point it at ES futures, regardless of whether or not you're trading SPX, SPY, or ES futures, since that will give you the most valuable insight. Before we get started, if you'd like to get a 10% discount for Trade Addicts, don't forget to use my referral link in the description. You'll also find referral links for TradingView and Top Step funded trader programs that will give us both discounts. Lastly, if you enjoy this content, don't forget to like and subscribe to help me grow this channel. You can see on my chart, I've already drawn the pre-market levels that I was going into the day with. All these levels I had pre-drawn from previous day price action with the help of volume profile, as well as the pre-market price action. Surprisingly, I didn't need to add a single level the entire day. My mindset on the day was pretty neutral due to being a quad witching day, which is one of the largest option expiration events of the year. My goal is to try to enter in this mindset every day to avoid having any sort of bias, even if I'm generally bearish due to the current economic conditions, just because in this volatility, we often do see big swings back and forth, and by having bias, I typically miss certain swings to the upside or to the downside, but today was different because of that options expiration event. I also want to point out, in this case, I did something different. I decided to add a 21 EMA to my chart and actually trade on the 1 minute for most of the day. The only reason for this is because I want more precise entries when we see level holds. However, I know if I trade on the 1 minute chart, I'll typically exit early, which is why I try to avoid it. So now when I get a good move off of a level, my plan is to hold until price crosses back below that 21 EMA, especially if it's in the first 90 minutes. And if I see a hold on a level and stay above the 21 EMA, I plan to start adding positions as well. And in this case, I took the liberty of circling my entries and exits to discuss why I took them. I also want to ensure that I talk about how I sustained losses from overtrading near the end of the day. So, and as you can see, these white lines are the levels that I've drawn from the previous day activity. I did have to turn off this volume profile so it doesn't consume too much of the screen that I do use throughout the day, but also I have my periodic volume profile set to the daily. And the 21 EMA that is referring to that I use on the 1 minute chart is actually this white line that you'll see as we zoom in. So let me turn off the visible range volume profile and get zoomed in here so we can see how the day began. And again, and surprisingly, I didn't add a single level the entire day. All the levels that were marked from the pre-market price action and the previous day price action held quite well today. So I'll go ahead and hit play. We are currently at the 9 minute and 20 second mark. And as you can see, we're coming down here, and what ends up happening is we get a bounce off of that level, and this is right at market open, this bottom level right at 367 or 3670, depending if you're looking at SPY or ES. I should also mention, of course, I do what I always do, which is check the gamma exposure and dark pools and things like that via the options dashboard for SPY and QQQ. You can see we're in a heavily negative gamma environment, which does indicate some sort of bearishness, but most importantly indicates high volatility, which indicates large price swings. So as we held this bottom level with this very bullish candle, now the volume looks lower, and that's purely because the market has not opened yet. If this had happened at 9:30, I'm positive this would have been an extreme amount of volume, but you can see right off of it, when the market does open, we get these big bullish candles moving us higher. So my first goal was to take a bullish entry, and I end up getting that entry right here when we see this level start to hold. And we form this first wick, and then I actually limit order in right here, and that's my first entry of the day, at which point we start pushing higher, and you can see, and one thing I want to point out here, now this is when I talk about adding entries, we're above the 21 EMA. Again, I'm on the 1 minute chart, that's why I'm using this. And this actually, even though we bounced off the POC up here and we do get some wicks, at the same time we hold this level break, and this actually would have been a great time to try to add entries, which as I get better at trading, that's something I want to try to do. And I just wanted to point that out because that's the difference between novice traders and professional traders, is not only do they have their starting entries that they take, but they can also add entries as they get confirmation of the move that they were looking for. So that's something I'm trying to get better at myself. And you can see here we stay above the 21 EMA. We don't really break below it on the 1 minute, so there's no reason to exit. And we get confirmation of a push higher here as we start to go. Now, it still does look that this POC is going to hold, which would be create a little uncertainty, but it still would be an ideal situation as we fail to break below to add positions, which I did not do. I just want to specify. So what happens is as we push to the pre-market high level, we start getting these long wicks. Now again, I didn't want to get out too early, but ideally this would have been a great exit for me. But I was concerned about getting a repeat of this where we hold the POC, come down, retest, and move up. And I was actually wanted to see if we came to the POC, held, and then moved up again. So that's what I was looking for, and that's why I didn't exit. Now in hindsight, and this is why I'm kind of divided on if I should actually use this 21 EMA or not. I'm just sort of experimenting at this point. If I would have exited here, that would have actually been a great exit, and then I could have re-entered here and actually made more capital that way. But you know, it's something I'm still working with. And what ends up happening here is when we come down and we break this 21 EMA, I actually exit my position, which is indicated by this yellow circle. The green circle was my entry, the yellow was my exit, and things actually start to look very bearish here. We can see sectors were starting to diminish at this point, and at that point as well, the market net flow puts were actually starting to become in control. Now this was kind of a divided day, you can see here, so it was difficult to tell at this point from the market net flow. We did get some bearish indications as well on the momentum shifts, but we can see here at this point when we break below and retest the VWAP, and just I didn't specify before that blue line is the VWAP, and I actually do use the VWAP as a entry point. I use it as a dynamic level, and so this was my entry to go short, or what would have been put positions if I was in SPY, and this was right off 36.93.50, or what would have been 369 on roughly 369 on SPY. So we hold here on the VWAP, and I get my move lower with all these wicks. And that's one thing I want to point out that I really do like about the 1 minute is you can see when we get these level holds on the 3 minute, oftentimes this would be just one wick or sometimes two wicks. So you have to think fast when you start seeing the wicks combined with the volume. But one thing that's nice in the 1 minute that I do like is that we always see multiple wicks. There's always multiple points where we can put a limit order, and we do see that every time we wick on these candles, we do have increased volume, which indicates stopping volume, which indicates the levels holding. So we start moving down here. Now I'm a little concerned. I'm watching my 21 EMA right before we break. We never do get higher, and then we break the value area right here. This is the value area low, this green line, and we break through this level really cleanly. And at this point, my goal is to stay in this move as long as possible on these strong candles. I want to point out here too, this pivot occurred on, so we get stamped up a little bit, and then we get a lower volume pivot, which is a good indication to stay in. The 21 EMA that I'm trying to use as my exit point stays well above us, and we continue pushing through now at this point what would be the low of day, so if you're excluding the pre-market. So we continue pushing. Now this would be another good point to add positions right here, which I did not do. But as you can see, we push through, retest the level that we just broke. Also, if you weren't already in the position, this would have been a great point to enter the position. And you can see we continue to drop lower. And again, one thing I want to point out, one concern I have about this 21 EMA is since it is a lagging indicator, it does leave quite a wide gap. So you do give up a good portion of your move, especially if you're trading options, when you factor in IV dropping down at the same time that price would be moving up to catch up to this 21 EMA. Now again, we're getting a retest of this level, which would have been a good time to enter positions, especially because we had stopping volume holding up that level. We could sort of start chopping around, and then as you can see, we continue moving lower, and then right here, when we get this level hold, would have been the ideal exit. But again, on the 1 minute, my plan was basically if we break the 21 EMA or this value area low, my plan was to exit. And what ends up happening is we do exactly that right in this yellow circle on this green candle, and that's what when I exit. Now at this point, again, given the volatility, I'm looking for a reversal, and this move was quite aggressive. This is actually more aggressive than I typically do. However, we were seeing these low volume bearish candles form, and then when we started getting this break through this level and this sort of volume strength on the 21 EMA, I actually do market order a long here, which 9 times out of 10 I'm using limit orders, but in this case I did take a market order through this and call it this move higher. Now in hindsight, another great entry would have been when this level broke, setting a limit here to catch the break and retest. And now again, I'm using the 21 EMA as my guide, and my goal is to ride this thing up. And what ends up happening actually in this case, I get this, see this vol, even though this green candle was it typically, you see a green candle, you think bullishness, but the extreme amount of volume that came in right here, I mean extreme, especially for the time of day, because it's actually past the first 90 minutes. Right on the VWAP, which again, as we know from before, acts as a dynamic level, which I use all the time. This ultra high volume on this candle with topside wicks, followed by a red candle, was enough to get me out. So in this case, I actually did not wait for my 21 EMA roll. Now, I kind of sort of came to regret that. And as we come back down, I thought to myself, this move might not be over. If we see this level start to hold, this zone here between the value area low and this level, I'm going to re-enter longs. And we actually did start to see just that. We get these downside wicks on higher volume with sort of a bull hammer candle. This is what we would consider a divergent candle when we're using volume price analysis. And at this point, I re-enter longs here after getting out up here. And I'm actually glad I did this, because even though I wasn't respecting my 21 EMA rule, I did end up capturing more profits. If I had followed the 21 EMA rule, it actually probably would have hurt me here. And as something I want to point out, I'm torn on if I'm going to use that, so or continue to use that in the future. Especially if I can condition myself to get better at watching these 1 minute charts. I'm always a 3 minute chart trader. Plot my levels. I do my analysis and plot my levels on higher time frames all the time. When I'm trading, I always typically stick to the 3 minute, and I'll mark the levels to indicate if they were found on the daily or higher time frames or gamma exposure or whatever it might be. If you don't know what any of that stuff is, please do check out my previous videos, because I do get into all of that. But if I can condition myself to properly read price action on the 1 minute and not get scared out of trades too quickly, or get good at exiting and re-entering like I did here, then there is truly no need for a lagging indicator. So, and I'm not a big fan of lagging indicators. I prefer, and up here is where I actually exit. You can see the wicks on the POC. I exit this position, and at this point, the majority of my trading, I was thinking, is done for the day. Now, while we let this play out, and just full disclosure, I have a primary job that I work, so I can only truly put a lot of attention on trading in the first 90 minutes. I do peek at it throughout the day. I do have a fourth monitor for that, so I can always watch it now, because my normal job does require 3 monitors dedicated. But so we're chopping around anyway, and one thing I want to point out is what happens on market net flow as we start moving. So I noticed throughout the day that on the market net flow we get this steep drop off in puts right around 12:45, and we're coming up on that now. And that's actually a very bullish sign. Even though calls are flat, I mean, they are slightly going up. This steep drop in puts is actually what got me paying attention again right around 12:45, and my goal was to take a bullish entry, a long entry at that point. And again, we're just getting chop, chop, chop. But we see that market net flow happen, and then as we hold the VWAP, and there are other trades I could have taken here despite the chop, however, I did not for the reasons I just explained. But when we saw this move down on this large candle, and then we see this immediate hold, and you can see this, even though my level doesn't line up perfectly here, you can see that we had a lot of wicks that pushed us up before, and then every time we kept retesting this zone that we could really call it here, as we retested that zone. So just to clarify what I'm looking at here, this, after seeing the market net flow indication here, is now my entry zone. And so I did actually take an entry on this bull candle that we get here. And so just to continue the replay now, I'm being cautious because I wanted to make sure we broke the VWAP, and we actually did. I did get nervous here, but I didn't exit. It wasn't time to slide my stops. Also, just to point that out, the way I do this is I keep my stops below the level or the zone at which I took my entries up until we break a next level. So actually, I'm sorry, I called that the VWAP, but that was actually the 21 EMA acting as resistance, which I just now realized, which is interesting. But regardless, the POC also acted as resistance, and it wasn't until we broke cleanly above that I actually consider sliding my stops up. You don't want to slide them too early, because if you do so, it will completely invalidate what would have been a winning trade, and I had to learn that the hard way so many times now. And then you can see as we break above the VWAP, we hold the VWAP as support, just like we did previously with the POC. Again, these would be good points to add entries, which is something I need to work on myself. Same deal here, we break this level with a strong green candle and high volume. Perfect point to add more positions here. So as we come up, we get this large move up. Fantastic move, which was completely broadcasted from market net flow, which we talked about here with the puts dropping off. And then as we start getting this bearish indication and we come down to the 21 EMA and we break through it, I exit my position. Now at this point, I've had several large, incredibly large winning trades on the day, so I'm feeling really good. And this is where things start to go bad. And this was this is where I should have just locked things up. There's nothing wrong when you're up on the day with good profits of taking your just closing it up for the day. I also had taken another play with XOM that I talk about in my previous video that was a fantastic win for me, and I really should have just called it quits. There was no reason to continue paying attention to the market at this point with how much I was up, but I make the mistake of doing so. And I just want to talk about these, what I, not necessarily forced trades, but in a way they were. And actually one thing that kind of slipped me up was, again, we get another dip here. So you know, I'm despite that though, I'm seeing this bearish indications, and I see what's looking like these candles are holding, and I feel like that off this 21 EMA. And again, this is another reason I might just get rid of the 21 EMA. But regardless, I shouldn't have been trading, and you could see up here I could have gotten out sooner. Like, this is a bearish engulfing, or not, it's not engulfing, but this is a very bearish indication where we just get a strong candle down, a weak candle trying to push it up, followed by another strong candle. I could have gotten out sooner, and then you see we have two more green. This is a pivot, and the reason why I say it's a pivot rather than a move higher is because it occurs on diminishing volume. So I could have easily have gotten out up here at some point, but instead I waited for that 21 EMA kind of mindlessly, and I gave back a little money, not much, but still I think I can do better without it. And then right here, for whatever reason, I try to treat it as resistance, and I try to take a short, and that's not something, and especially after seeing this bull hammer off the VWAP, it just kind of, I'm kind of confused why I did this. Like I said, I was forcing trades, but in reality, with this move up, I should have been taking a limit long here, if anything. especially with what we were seeing in a market net flow with puts continuing to diminish. But instead I took a short, and just being out of my element, I get stopped out. When we come up here, it doesn't go my way, get stopped out, give back some of my money, and then I tell myself, okay, you know what, first loss of the day after several good trades, I should be done. And unfortunately, I just had that itch, that emotional itch, and emotional control is so important in this. As you could see, if I had been thinking more clearly, been paying better attention, this limit long down here, this bull hammer limit long off this level would have been absolutely fantastic. However, I just didn't trade it right, and even shorts off of here would have been a fantastic trade. When we start seeing, we get these strong move up, and then we see all this stopping volume, could have rode this down, followed by a bull hammer on high volume. There were several great trades I could have taken, and we have a hold of the value area high. I didn't take any of these, and then I start feeling like, because I'm paying too much attention rather than giving up, I'm like, you know what, I'm missing more profit here. Let me try to get in long, because I think we're going to come back up. And then right here, I try to set off of this candle, I take a long entry, and then what happens is it immediately reverses on me, and I get stopped out at this level. So again, and the crazy part is this was right on the POC in kind of an ugly way. It didn't even line up properly, and I still forced it, and it immediately went against me. I mean, these candles up here should have indicated bearish. So I don't know what got into me at the end of the day, but I did want to point it out and be transparent about it, because it is important to have that emotional control when you're way up on the day. There's nothing wrong with taking your bag and stop trading early and go on and do whatever else you need to do for the day. And I just kind of started feeling lucky, and then started misreading the market and forcing trades because I felt like I could have been making more. And but regardless, I respected my stops. When I'm wrong, I never let my stops run. I cut my losers when appropriate. You can see here, I cut my loser at the POC. Here, I cut my loser when this level was clearly breaking. So, even if you're wrong, you can still minimize your losses. My wins were still significantly better than my losses. So that's the important factor. And then that's how we ended up closing out the day. So thanks to market net flow, I did get a nice trade here, and then I completely failed to use it later on in the day, which regardless, though, it was a choppy day. And after getting the wins in the initial 90 minutes that I achieved with XOM, and then the trades that I just went over, I should have just been done. But anyway, I did want to provide that recap, and I hope that was helpful. And we did get to talk a little bit about emotional control. At some point in the near in the near future, I'm going to do a video all about position sizing and risk management, and then also another video on that position sizing is going to cover proper risk reward ratios, scaling in, scaling out, and then I'm also going to do another video on how I got control of my emotions and exercises you can do to help with that. So anyway, again, if you got something out of this and you have any questions, feel free to leave a comment, and please share this around, like and subscribe, and I appreciate you watching.